Okay, so we have 3 o'clock Eastern time, 2 o'clock Central time, and noon Pacific, I believe, if I'm doing that math correctly. My name is Tony Bramley, and welcome to TMC Connect. Have a full house today, so we're going to let people continue to come into the call, and thank you very much all for being here. We really appreciate you taking the time. Know how crazy busy everyone is, so we appreciate you sharing your time with us today. We have today with us Mortgage Quality Management Research, affectionately known as MQMR. And today they're going to be talking about unprepared is unacceptable, keeping your vendor management program on target. With us today, we have Abigail Villegas. Hello, Abby. And we also have Lily Ortiz. Hi, Lily. How are you? Abby is a professional compliance matchmaker at MQMR, and Lilia is a risk analyst. They're going to be talking about vendor management. Quick backstory about the two of them. They went to high school together, played on the same soccer team. As they were practicing this, they were calling each other Abigail and Lilia, and they don't ever call themselves that because they know each other as Abby and Lily. So as they're going through today, you will be able to know them as well as Abby and Lily. Quick housekeeping, just so that you guys know, you have all entered in on mute, but we do want this to be engaging. So please drop your questions in the chat or the Q&A function, and we will be taking those questions at the end of the presentation. Once again, I'm Tony Bramley with TMC Connect, and thank you all so much for being here. Abby and Lily, I'm going to turn it over to you guys.
Can you hear me now?
Yes.
Yes. Okay.
Excellent.
Thank you. All right, let's get started.
Thanks.
You ready, Lily?
I'm ready.
All right. Well, hi, everyone. I want to start by saying thank you for taking time out of your day to join us. We know that this is the last quarter and everyone is trying to end the year on a high note, so we promise to keep this short and sweet. Before we start, let me introduce myself. My name is Abigail Villegas, and I am the Marketing and Experience Manager here at MQMR. And to give you a little background, before making the move over the sales and marketing world, I was on the HQ vendor management team with Lily Ortiz. She has been a part of our team for several years now and is our vendor management expert.
Hi, everyone.
We are both so excited to share with you a little bit of one of our absolute favorite topics, vendor management, which of course holds a special place in both of our hearts. Today, we will walk you through a journey of vendor management's past, present, and future. Lily, why don't you kick off our presentation with how it all started?
Thanks, Abby. Before we get into all the nuts and bolts of vendor management, let's take a step back and take a trip down memory lane back to 2012 to be exact. For those of us with a horrible sense of time, this was shortly after the Great Recession. Things were just getting back to normal, and then here comes the CFPB with a bulletin. The bulletin stated that all supervised banks and non-banks are expected to oversee their business relationships with their service providers. This was designed to protect the interests of consumers and avoid consumer harm, which is all fine and dandy. However, there was no clarity or direction on how to keep your vendor management program on target at that time.
Do you remember back in 2013 when news broke that Target had a massive data breach that affected millions of customer records, Lily?
Funny you bring that up. Actually, I do. I couldn't remember the exact details, so I had to do some research to refresh my memory. Did you know hackers stole credentials from one of Target's third-party vendors? For those of us who like stats, Target reported that hackers stole data from up to 40 million credit cards and about 70 million consumers' personally identifiable information, or PII, which interestingly enough, is not the largest number of credit and debit cards ever compromised in a cybersecurity breach. Scary, right? Now, does anyone remember the name of Target's third vendor that was compromised? Sorry to put you on the spot here, Abby. Do you recall the vendor's name?
Gee, thanks a lot, Lily. Honestly, now that you ask, I don't. It's crazy because I recall the story making headlines and it was on every channel. Unfortunately, the only company name I remember right now is Target. But I can tell you what I do remember as an avid Target shopper, or as we call it, Target. I had just done some major holiday shopping, so I remember waiting anxiously to see if any of my personal private information was compromised. What I don't remember is the vendor's name.
Neither did I. And that's where I'm going with this, because most people don't remember the vendor's name. To make a long story short, a phishing email infected the vendor by installing malware that allowed hackers access to the customer service database and captured full names, phone numbers, email addresses, payment card numbers, credit card verification codes, and other sensitive data. Target allowed a third-party access to its network, which wasn't out of the norm at that time. Target's mistake was eye-opening and a game changer for many companies on how they viewed their relationship with their vendors.
You know, Lily, at the end of the day, no one remembers the vendor's name, like me, where the data breach occurred. Everyone remembers and focuses on Target. Mortgage lenders are liable for the vendor's action, which is why it's so important to keep your vendor management on. Can you guess what word comes next, Lily?
Target. I see what you did there.
Although many were aware of the 2012 CFPB bulletin, it wasn't until the 2013 Target data breach that companies realized they needed to have something in place to manage their third-party vendors. Like you stated earlier, Lily, at that time, no one had a real clear direction on how to build a robust vendor management program. And voila, that is when MQMR launched HQVM in 2014. In addition, that is when our team quickly identified 5 critical areas of risk: operational, reputational, regulatory and compliance, legal, and last but not least, financial. And the only way we grow is by learning from the past. Sorry, go ahead.
That's true. Yes, that's definitely true. And as we dive into each area of risk that you just mentioned, Abby, you will notice how they correlate with one another and how they all impact a lender's overall risk management. First, let's take a look at the factors that contribute to operational risk. To keep it simple, this happens when there's an interruption in a vendor's processes, which means if a vendor cannot provide its services as promised, you may not be able to perform your daily operations. Promises such as to keep customer non-public information, or NPI, y'all know we love our acronyms, deliver goods and services on time. It could even be loss of client assets through negligence, data entry errors, and the list goes on and on. In 2020, many companies doubled or even tripled their volume. Was your company prepared when the housing market blew up? Did you ensure third-party vendors could support your increasing needs? And can your vendors maintain their promised level of services? And the key word here is maintain. Vendors need to be prepared with a growth strategy plan to meet future expansion needs. Bottom line, your needs and the vendor's ability to deliver must be in sync, and it's imperative to have a well-designed response and contingency plans around the services more vulnerable to attacks and avoid negative views on your brand, which brings us to the second type of risk, reputational. Who has heard of this quote? It takes 20 years to build a reputation and 5 minutes to ruin it. Sadly, we've seen this happen to many trusted, well-respected companies. I'm sure many of us have left a Google review when we were dissatisfied and or satisfied, which can ultimately influence a company's image in a positive manner or tarnish its reputation in just a matter of minutes. How many of us were hesitant to shop at Target after the infamous breach?
Me.
Yeah, as an avid Target shopper, I would definitely think that you would have hesitated afterwards. Did it even cross your mind that it wasn't Target who got hacked? Maybe not. To prevent this from happening, it's imperative that your company implement internal controls and systems to support regulatory compliance, secure data, and ensure product quality.
Did I hear you just say regulatory compliance? It's like music to my ears.
Oh yeah, music to my ears too, Abby. Compliance risk generally refers to a violation of laws, regulations, and internal processes that your organization is required to follow so you can conduct business. Laws that apply to each company will vary by region and or services offered. However, they share the same outcome, substantial fines. So, for example, your marketing vendor may not even realize it's engaged in discriminatory practices when posting on social media, which, by the way, is a very hot topic nowadays. Data privacy is an area scrutinized by regulators, making it critical to ensure compliance with laws, regulations, and best practices proposed by regulatory bodies. How many of us on this call have read the contract you have in place with your vendors in detail? Many probably have, but to some like me, reading a contract can look like a bunch of mumbo jumbo. It can be quite intimidating. Still, it is critical that you can decipher and understand what provisions are included in the contract with your vendors. Let's take the high-risk vendors, for instance, that provide critical services, usually involving access to NPI. You should look out for privacy obligations related to the handling of such information. Lenders should also require their vendors to notify them in case of a breach. Now, let me ask you this. Is your vendor allowed to outsource some or all of its services to a third party? Now, who would be liable in case a breach occurs at a third party level? I know I got some of you thinking. You should also ensure you have recourse through an indemnification provision in case there is a breach of obligations regarding your NPI. Remember to always CYA, cover your assets, which is another acronym we often use here at MQMR. And speaking of assets, let's jump into financials.
Let me stop you real quick, Lily. That's really good insight you just brought up. I wonder if Target had anything like this outlined in their contract.
That's a good question. I didn't find anything, but I sure hope they did. What would you do if your key vendor all of a sudden goes out of business? To avoid finding yourself in a burdensome situation, it's best practice to analyze financial statements to gauge your third-party vendor's overall financial state. In essence, financials are a reflection of the company's operations and performance. Additionally, if we go a bit deeper into financials, it actually reflects a company's liquidity, solvency, profitability, and operating efficiency, which are all critical areas that can determine whether a vendor is performing in accordance with best practices or possibly indicate red flags, which can ultimately lead to bankruptcies. Unfortunately, we saw something similar happen to one of our very own clients, who, by the way, chose to end their business relationship after an unfavorable rating was given in the vendor's financial assessment, among other red flags within the risk assessment. Unsurprisingly, the third vendor declared bankruptcy. The twist and turns. Whoever said vendor management was boring.
All right. Well, a question we should all ask ourselves is my company addressing these 5 areas of risk in our vendor management program today? And am I ready for what tomorrow may bring? You know, the choices today we make dictate the future. And I say this because, as we all know, 2020 changed the way we do business today, including increasing the importance and value of vendor management. Regulators, warehouse banks, investors, auditors, everyone is looking at it. And during recent global events, many companies were faced with all sorts of challenges. Now, more than ever, you need to ensure your third-party vendors have a robust business continuity plan and be able to maintain both short-term and long-term outages. This includes a workplace pandemic preparedness plan, which would encompass challenges such as travel bans, a remote work telecommuting infrastructure, and an outline on how your vendor handles government mandated quarantines.
You know, Abby, I'm sorry. Those are all great points because prior to the pandemic, many companies did not have that included in their BCP, or if they did, it wasn't as robust as we see today. So most vendors are now aware of that gap and are beefing up their BCP.
You're right. And when the pandemic first started, many companies and vendors were faced with a shortage of technology equipment as well. I remember reading responses from vendors asking for extensions on deadlines because employees were left waiting for their computers to arrive. And with so much technology at hand, who would have thought that the availability of computers and laptops would actually become an issue? So how can we prevent this exact situation from happening in the future? Well, a good rule of thumb is for vendors to compile an inventory of their hardware, such as servers, desktops, laptops, and other wireless devices. At a minimum, the plan should ensure that all key employees and departments have equipment available on hand. And working from home is no longer a dream, but a reality. And did you know that it is projected that 1 in 4 Americans will be working remotely by the end of 2021? And we do not foresee this changing anytime soon. So is your vendor's HR proactively managing work from home procedures? And it's so imperative that vendors have a centralized location for training materials, corporate policies, and company announcements. And just in the last couple years, we have learned the value of cross-training as well. It not only boosts productivity, but it also prevents exhausting employees during hectic times. So let's imagine a team or department of 4 of the brightest, most talented employees, and one of them happens to become ill or becomes unavailable for an extended period of time. What would happen to the team? More importantly, could an event like this affect your services or your reputation? And it's also essential for IT staff to allot additional time to help employees with basic tasks, such as assisting with home office setup and establishing a secure connection to its network. Your vendor should also properly train its employees to detect phishing scams and employee cybersecurity protection. Otherwise, employees could unknowingly put your corporate data at risk. Strong passwords should be implemented and regularly updated to protect point-of-sale devices and other sensitive hardware. I read somewhere, don't approach life's challenges by being reactive, be proactive. Prepare for the possibility before they arrive. In a regulated industry, your organization is responsible for compliance. I know it's easier said than done, but mortgage lenders need to be proactive in implementing and maintaining a strong vendor management program to ensure that all parties understand the requirements and the risk. And to conclude our presentation, I want to leave you with one last thing. Don't let yourself be a target for regulators. Thank you.
Excellent. Thank you guys so much. Appreciate that. We do have a couple of questions. So what would you do if a vendor didn't provide their financial statements? You gave us a very good example of this, but can you talk a little bit more about that?
Yeah. Lily, would you like to take the first question?
Exactly. Oh, financials. Let me say this, we never have difficulties acquiring vendor documents. Yes, I can take this one. Getting vendor documents can be like pulling teeth, goodness gracious, but We do attempt to get something because something is always better than nothing, right? If the vendor refuses to provide their financials, we do request a letter from their accountant stating that they are in good standing, and then that will help cover the lack of a full financial assessment. That's a good question.
So if it's a private and they say, well, we're not required to have, if we're not required to have audited financials, then that would be when you would ask for a letter from the auditor?
Correct, yes.
Correct.
Awesome, excellent, thanks so much. Social media, don't we all love it? We love to hate it. So it's a hot topic. Lenders are, wanting everyone to be online and out there on social media. So the question is, how does that fit under vendor management?
That is a loaded question. And like we said during the presentation, yes, it is a hot topic in today's industry. Abby, do you want to share your thoughts on this topic?
Since I love social media, let's see, where do we start? So social media vendors, they could post and create content or scrub existing content for compliance. So you'll want to perform your standard oversight. For example, who is the company and who are their people? How are they delivering the quality services? And are they going to be around to support you long-term? Basically your financial assessment.
Those financials again. Then I think those are all very good points, Abby. Just to add maybe one more thought to this, vendors that post on social media, could they pose a reputation risk? We could say that too. This is a little bit more simple, but you want to collect and review their social media policy.
Excellent, thanks so much. An additional question, please talk about the categorization of vendor levels for risk and critical analysis. So in the example it gives, we are not sure that we would ask for all documentation for the water delivery service like sparklets.
Okay, we would consider that more of a low risk vendor, a tier 3, just because they don't have access to NPI or non-personal identifiable information. So that we would consider a lower risk vendor. And then we have their high risk vendors that have access to NPI.
So that's where you would draw the line, access and no access.
And then some access would be like your medium level or your tier 2s. So we base it on how much access they have to consumer or customers' information, personal information.
Okay. And then another question, do you guys review the vendor's SSAE 16 SOC 2 report as part of a vendor management process?
Yes, we don't take a deep dive into it, but we do review it and we do point out any exceptions that we find on, say, a SOC report. And we bring that up. So whenever the client is reviewing the assessment, we do point that out for them. So it's easy for them to see.
And then also just to point out, once again, it's challenging getting documents and getting the vendors to complete questionnaires, and that's always been a challenge. So if a vendor just refuses, or for whatever, it could be they can't click on links, external links, for whatever reason they can't complete the questionnaire, and that's something definitely that can serve in lieu of completing a questionnaire.
Okay, excellent.
Oh, that's a good one.
And how do you address cybersecurity related risks as we are seeing more of the breach attacks on organizations?
Well, we do review their data security within our questionnaire. Actually, before the pandemic started, we implemented remote access policy in there, and they had to fill that out. What was if they had one in place, or they did allow their employees to work from home, what protocols did they have, and is there antivirus and all that? So we do ask those questions within the data security section. And we break that down as well. And we rate those sections for the clients so they can see that and see if it's a high risk vendor or not.
Okay.
Is there anything you want to add, Lily, to that one?
No, I think you covered it. Like you said, it's basically your standard data privacy policies that we're looking for. In addition, we have switched over to asking for a remote policy, a working remote policy.
Okay.
Yeah, we actually put that in place before the pandemic, which actually was right. It's very fitting. So when the pandemic did happen, we're like, oh, we already have that in place. So
we were ready.
We just saw the industry changing and more companies allowing their employees work from home. And so that's when we decided as a team to implement that in our questionnaires.
That is very good timing. Absolutely.
We're ahead of the times at NCM.
Does the frequency at which you review a vendor vary based on their designated tier level? Going back to critical. And does everyone get reviewed annually?
I think as a rule of thumb and best practice, we do recommend that all vendors be vetted on an annual basis. Definitely. You just want to make sure to, if their policies have changed, that you catch those. If the executive team has changed, that you're capturing all of those changes and ensuring that your vendor is still at par. So definitely, yeah.
Okay.
I'll also add that to the questionnaires is, yes, they are annually, but the depth of questions we ask depends on what tier they are. So if it's your water company, we're not going to ask the same questions. We're going to ask a tier 1, a high risk vendor that has access to MPI. So our questionnaires also depend on what type of risk the vendor poses to your company.
Got it. Understood. And then, golly, guys, keep the questions coming. This is awesome. I love this.
Come on, bring it.
Bring it on.
Bring it on, guys.
Making me sweat here.
You guys are doing great. You're doing great. With regard to the insurance coverage, how much is a minimum requirement? This one's good.
That's a good question.
Yeah.
I think it would depend. I mean, Lily, you can help me out with that one.
What we've seen across the industry, this is again just a best practice or a standard, I should say. We do ask that vendors maintain a 1 million aggregate policy. For the E&O, we do ask that vendors have a fidelity of at least 500,000, along with any other such as cybersecurity. We've seen cybersecurity policies vary, but definitely that E&O and the fidelity are on the top list there. I don't know if you have anything to add, Abby.
No, that was a good answer.
And then we've got another one based on critical levels. So how would you categorize, this kind of a follow-up, I think, from the same person. So how would you categorize the SBA brokers who bring a loans referrals to the bank? Usually they are a single person running a self-employed business, so it's hard to ask a lot of documents like financials. On the other hand, they are providing MPPI, so for a potential customer. How would you handle that one?
That's a good question. I think Dana on the call, I think she could answer that one a little bit better. Dana?
Yes, I am on the call. Can you hear me?
There you go. Yes.
Yes, that is a great question. And the reason why Lily and Abby have referred this question to me, because we actually separate broker oversight from our core vendor management oversight program. And so we separate brokers, and really because they are in their own subset of risk. And so what we apply is what we like to call a broker approval program. So they are critical vendors. for obvious reasons. And some of the things that we do specific to broker oversight is we are going to collect general information about the organization. Financial reviews are a very important aspect of broker approval. Background checks. Now, it really depends on the extent of the relationship that you have with your brokers, but from a policy perspective, some important things to collect and assess is possibly their BSA and AML policy, as well as their QC plan.
Excellent.
I hope that
Thank
answers
you, Dana.
Good answer.
Yes.
Good answer, Dana.
Thank you.
Appreciate that. Felt like we were that who wants to be a millionaire. So that was our phone a friend. So thank you very much.
Can I phone a friend?
let's throw that back.
What other
So,
lifeline can I use?
I know, right? Okay, so yeah, if any other questions, please feel free to bring it on. And Dana, yes, you did answer that question, so thank you very much for that. And one, I think, final question, because unless you guys have more, and if you do, please send them on in. So you talked about COVID and the changes that COVID has created in the workforce with everyone being remote. What other changes do you foresee vendor management having to address in the future?
Yeah, actually, I'm not sure if maybe you have already seen or heard talks about this, but fourth party vendor management. Like, how do your vendors oversee their vendors? And the focus and priority would be the same as it is in today's environment, which would be data security. But that is where we see it going right now.
Excellent. So deep dive, deep and even deeper dive. Yeah. So excellent.
Yeah, I mean, we've started seeing that already, but I think it's going to go more in depth in the future as well, maybe possibly here in the next few months.
Got it. Excellent. Thank you. Well, thank you all so much. Thank you. Oh, got one more question here. Oh, no questions. Just wanted to say you guys are doing a wonderful job. Yay. Thanks so much. Appreciate that.
Thank you.
Thank you,
Positive feedback.
Tony. We appreciate it.
Thank you guys so much for your time. Very, very much appreciate it. MQMR always am able to bring quality programming to TMC. We've done fair lending in the past. We've done all different types of topics on compliance. You guys touch many different business verticals, and we very much appreciate you and all of the expertise that you bring to TMC. So thank you very much for that. Thank you all so much for joining us. We really appreciate it. As I dropped in the chat, you will receive a video, YouTube link for this session tomorrow as a follow-up email. So thank you for being with us. We have chock-a-block schedule for TMC Connect, so please feel free to come back anytime and be with us. Always bringing great content to you, and we do appreciate you. So thank you, MQMR. Thank you, Abby. Thank you, Lily, very much. Thank you, Dana, for taking that one throw call. And we are... hope everyone has a great rest of your week.
Yes, thank you.
You too. Thank you so much, Tony. We appreciate it.
Thank you, Tony.
Bye.